afternoon, everyone. Welcome to Multifamily on Zoom. Thank you. Happy New Year, everyone, for joining us in the first Multifamily on Zoom. This is going to be the party of the year, our first meeting. And today we have the man himself. And I would like everybody to show their face. Some of us, we haven't seen each other since last year. It's a good time to show your face, and we're gonna be here and spending that hour together and having fun as always. And today, as you guys know, we having Bob Bowman here, and I don't know. I have to say much about Bob Bowman. Everybody here knows Bob, but I'll go quickly. As you know, Bob Bowman is the president and CEO um, and serve as a fellow principal of Bowman Investment Group. They formed it in 2002. Initially, Bob began his real estate career purchasing single homes in Central Florida. And then until the real estate crisis in 2008, after making a paradigm change, he began buying institutional grade multifamily apartment in Texas. Since then, he has purchased apartment as small as 34 unit to the largest 384 unit located in South Carolina. Later, Bob acquired office building in Dallas and Charlotte, and today focus on RV resort parks and campground acquisition. Bob is recognized as an experienced and exceptional operator of commercial real estate property, delivering above average return due to his strict underwriting business model. Bob also does public speaking for nationally recognized real estate investment company on topics such as commercial real estate and how to raise all of the private money you will ever need for your real estate deal. Today, he is best known for his underwriting skills and developed a cloud-based software underwriting tool called Commercial Underwriter that many of us use. As an example, me. The software allows investors to make investment decisions quickly and accurately with unprecedented sophistication. It also incorporates AI when entering seller financials. The software is referred to by its users as simple input with sophisticated output and is recommended by new investors learning to underwrite, experienced investors, sponsors, passive investors, and many others. So, Bob, welcome to Multifamily on Zoom. This is your second time here. I think the last time you came here, it must have been like either 2002 or 2003. I can't really remember. But thank you so much for willing to be here. I am so excited.
Well, thank you for having me back as your guest. I appreciate it, especially, this is tough, on a Saturday afternoon. So you on a Saturday afternoon, something like this, you get the serious people.
Yes. I hope more people show up. At times we have up to 25 people in here, especially when you have people like you coming here. But we'll see. I'm sure they're coming in.
Yeah. Well,
All
good.
right, Bob. So
Well,
tell us about what you do in those days. I know lately you've been doing a lot on RV Park, so I'm gonna let you take the mic.
okay. Well, thanks, Suze. Yeah, I've been focused. Some of you know that get my emails like Bob and Dana. Really focusing on RV parks because I think there's like a really unique financial investment opportunity here that isn't going to be available for a long period of time, maybe over the next, 3 years as more and more people enter into the space. But, I thought I'd just give you, when I do my RV park mentoring and my coaching, I do, a couple sessions a year. I usually like to start off with, just some really good basic information and a little bit of terminology so that people know what we're talking about as we talk about an asset class that's different than apartments, much different than offices and retail and different asset types. Uh, People tend sometimes to associate it with mobile home parks. but it's not a mobile home park at all. Mobile home parks are valued and underwritten and differently because there's not a lot of revenue except the revenue that comes from the concrete pad. It's not the mobile home. So anyway, well, I thought I'd just start off and got a few slides and this is something that I do. And I start with, like I said, when I do my own personal one-on-one, when I do my coaching. So let me go ahead and can I share my screen? Am I set up to
Yes,
share? Okay.
yes, you can definitely share your screen. But
Okay.
before diving into RV Park, I really would love you to take a dive in other asset class and what makes you make that move to RV Park now. I don't know if you have this in there, but would like you to stress that out. As opposed, I mean, you've been doing multifamily for quite some time and you have done office and some medical, but why RV Park now?
Well, I think it's the RV parks has been a hidden gem in the overall business in buying real estate. But what's different, excuse me, is that you're really not buying real estate here. You're buying a business. And buying a business is different than buying a property like an apartment or office building. So I see and I like good real estate investment properties. And it doesn't matter too much what it is because of my software, Commercial Underwriter, and the people, investors that use it. I get an opportunity to look at medical office buildings and warehousing. I've looked at storage facilities, mobile home parks, student housing. Also, I own office buildings. I've had offices for 9 years, going on 10 in Dallas and Charlotte. And so I get to see and understand a lot of different property types and their values. But when we came across about 3 years ago, the RV resort park, but it was, kind of by coincidence, where a friend of mine that I work with. He's got three young kids, and he was taking them to these RV parks where he lives, and they were having so much fun. And he also realized they were spending a lot of money, but his kids were having a ball. And a good friend of mine here in Orlando is a big RV camper, and he's always complaining. He's complaining about, he's taking a trip from Orlando with his wife. They're taking their camper up in the Montana and then eventually in Canada. And all he does when we meet and play golf together on Wednesdays, when we get a chance to play together, he just complains all the time about how difficult it is trying to get a camping space because these RV parks are in such really high demand. So, between our experiences and the conversation, we it just prompted us to look at this as a business. Well, what is this? How much money can be made in one of these? What's the market like? How do you get them financed? Where, is there an opportunity here? And what we learned when we started underwriting and understanding the business, that there was a significant opportunity today because the majority of the entire marketplace is still made up of mom and pops. And the mom and pops own one park and that's how they make their living. And that's how they keep them for 20 years or more, 30 years. We had one under contract, and the lady and her family, they've owned and operated their campground. It was in eastern Pennsylvania, up in the Poconos, and they had owned that property for 70 years. And the father started it and then passed it down to the daughters. And now the daughters who have been operating it all their life and involved just was, they're done. We want to retire. Nobody in the family wants it. We need to sell it off. So some of these, all of these, a majority still of these campsites and RV parks are still run by mom and pop. So, it's not real sophisticated sometimes trying to get financials and trying to get information because it hasn't been institutionalized yet with, sophisticated software and spreadsheets and management companies and that captures all kinds of information. So it's a really good opportunity right now. So as an investor, my goal is to buy, maybe three or four more of these, wrap them all up, and in 3 years, 4 years, sell them off to a REIT. Because I own one now, and if I had five or six, I would be pretty happy with that. But they call mobile home parks cash cows. They're in mobile home park business and those properties, there's not a lot of equity. In mobile home parks, the revenue and the value comes from the concrete pad. It doesn't come from the mobile home. Whether there's somebody paying rent or there's a mobile home on it or not, it's still counted as a unit. And so that even though there's not a lot of equity, there's pretty good cash flow. But when people saw that opportunity about 4 or 5 years ago in mobile home parks, people started migrating to them and it became more competitive. But the thing that I like that's different about RV parks is that there's more than just the actual site. In mobile homes, just the concrete pad is the site, that's the unit. And you have rental site units in RV parks, but you also have many other ways to generate revenue, which you do not have in apartments or you don't have in mobile home parks. I'm gonna show you, from a financial underwriting side, some of the differences between, say, an RV park and, most people are familiar with apartments, and I'm going to show you a few things on some of the differences. So let me give you some really good content, some foundational and fundamental information about an RV park and its opportunity and some clarity. And then later, as we go through this, I'll, actually show you some underwriting, some real deals that we had under contract. So let me share my screen with you here, if I may. Let me go back in here. I'm sorry. Share. There we go.
Ooh.
Okay. All right. Can you see my screen?
Yes, I can see your
Okay.
screen. Yes.
All right. Very good. All right. So we're going to talk about, like I said, a little bit of information um, on a campsite. Actually, this is one of the properties we had under contract. It's a beautiful property. You notice right here in the upper left-hand corner in this lake, there's an island, and what you don't see there is that they built a cabin in there. So people would go here from this dock and they would take their belongings and they would take a rowboat and row over to the island and camp there and spend the night there. It was really cool. It was a really big park. And again, they had glamping. I'll explain that. They had canoes and kayaks and all kinds of water things that you could do, including they had a separate pool, etc. This was probably over 400 sites, I believe, 420 something. It was on 180 acres. 75 of those acres was this lake. They had a dam, and that was the problem, is the dam, because the owner was responsible to take care of the dam. And the dam needed 1.3 million minimum repairs. And so we ended up not being able to do this deal because we never got a final approval from the government because the government because it has to do with public waterways. They have to approve of any kind of repair, construction, etc. And so we weren't able to get to a number. We didn't know what it eventually was going to cost, and so we got kind of spooked from the deal. But anyway, let me move on here. So first of all, the market itself, how big is this? Well, there's about 15,000 campgrounds today, and about 13,000 are private, and 1,600 are state parks, and another 2,000 are kind of very family friendly. Some of them are luxury, or some of them are adults only. I did run into a park that we were looking at. We made an offer on. It was adult only, and you had to be 18 years of age. Um, and it was only for males, 18 years of age, no females. And the only other thing that was unique about it is that at this adult only park, clothing was optional. So I told my partner Dave that he was going to have to do the due diligence. We ended up getting that thing really close to contract. And then something happened. They were doing some kind of expansion, and it was going to cost $400,000, and the seller was going to take care of it before closing. And then after we got our LOI accepted, they decided that they weren't going to do that. And so we subtracted $400,000 from our purchase price, and then they ended up doing a contract with somebody else. But it's a pretty big market. $7 billion industry, and there's more campgrounds being built today. So in the next couple of years, there'll be 3,000 more campgrounds that are being built. So why RV parks and campgrounds? Well, the market, as I mentioned earlier, is mostly family owned. And so there's less competition right now than any other property type. Um, there are many ways to increase your income. For example, in an apartment complex, when your insurance goes up, which seems the big problem in apartments today, is the cost of insurance. You have no way to recapture that increase from your tenants until you are able to increase their rents after their leases expire. So it would take you more than a whole year just to try to catch up. So in RV parks, there's a lot of ways to make cash and change prices on a daily basis, if you will. So, camp spots are, usually you're typically in really high demand. And the prediction is for some really strong financial growth in this industry from everybody we've talked to in the next 3 years. So let's just talk for a moment about just some basic things when you're looking at an RV park and you're trying to, you say, well, we have 200 sites, 200 places to rent. So, well, what kind of a site is it? So let's just talk for a moment about the types. The biggest trend is glamping. And glamping is nothing more than a very sophisticated tent. Some of these glamping tents, they have air conditioning, they have Wi-Fi, they have TV, and it's kind of like a hotel room outdoors. And so some of these glamping tents and sites are really nice and very sophisticated. I'm going to show you a number of examples of different kinds of glamping tents, but a lot of the big companies now, like the Marriott and the Hilton and them, are buying RV park glamping sites, luxury higher end, and they're buying anywhere from 5 to 10 campgrounds at a time of this type of thing. They're really going after it. So that's the other 20% of the 80% market, because the hotel industry and hospitality, their business and their business model and how they treat customers. are basically the same when it comes to RV parks. It's all about the camper's experience and having fun, right? I don't have fun when I go to my apartment. I go there and it's nice to see everybody and see the people, and I enjoy it, but it's not fun like camping when you go there. Camping is fun. Here's another example of a tent. You can see these things really get sophisticated. Here's another type. Here's another type. Here's some more. You can see there's many different types of glamping. This is a really big one here. This one here is really cool. Here's another one similar to that we saw before. This one's pretty open, really nice. Here's one, or you can see what it looks like on the outside over there. Nice little glamping tent. Now, here's a really nice one. You can see there's a lake or an ocean. Now, this could be something like Lake Erie or Lake Michigan or Lake Superior or some big lake. I'm not really sure, but you could see on the inside, this is a really nice, they got a desk over here, king size bed, two chairs, and it's a tent. It's an actual tent, but you have regular doors over here. So they can get pretty sophisticated. Here's a fancy one inside. And so that's one kind of campsite. It's called glamping. And those were some examples. Now, another type of camper and a campsite, we have what's called seasonal campers. You have seasonal campers and you have what's called transient campers. The seasonal campers are there year round. And they typically will leave their camper or their RV a lot of times in the winter at your spot because they don't want to lose their spot. They want to keep a spot, and they come back year after year, and they like to come back to the same place, whether they take their camper with them or not. They sign a contract before they leave. They give you a deposit that to hold their space, and so you have RV and campers, the sites, and of course we all know what an RV looks like. Um, people that really enjoy themselves, sitting out next to their camper or their RV. This looks like a camper right there that hooks to the back of some kind of a pickup truck. Okay, the third type of camping is called primitive camping. Now, this is where you take a tent, you put it on the ground. You can see here's a couple, they call them pup tents, P-U-P, pup tents. Great for the kids, easy to set up. And most of these primitive sites, as a matter of fact, not just the primitive sites, but all of your sites should have a place where the campers can sit and also can have a fire. You need to have a fire ring for every campsite. So people that want to cook marshmallows or hot dogs or want to just have a fire in the evening, they can do that and they can enjoy it. There's another primitive tent. This is more sophisticated. We used to have something like this years ago. I used to camp when I was younger in Indiana Dune State Park up in Northwest Indiana. And you can see here the family enjoying themselves. A little campfire. You got to have, we use these old tire rims that we put outside of the tents. So this is basically primitive camping. And then the last type of site, if you will, are the cabins. Some people are building and putting in tiny houses. You're all familiar with tiny houses, and they're putting them in also because they make a great cabin for that family or two adults that want to camp in more of a cabin type site. Here's another one. We have one exactly like this at our park in Ohio called Country Acres. Again, here's another cabin type. There's so many different varieties of these. So so those are basically the four sites: glamping, RV campers, primitive, and cabins. Now, the biggest thing in these parks and the fun part is that it is fun. And here you can see that if you're on the water, this here looks like a pretty large river, or maybe here there's a lake, and you can see people enjoying being on those little paddle, shoot, I forget what they're called. My mind just went blank. But anyway, if you have water, it's your experience and the amount of things you can do is enhanced because these things are rented by the hour. This is money in your pocket. That's why I love RV parks because golf carts and bicycles and canoes and kayaks, paddle boards, all these things that you rent and they generate revenue for you. So, it's really important that you have fun. Now, this is a list, believe it or not, of all of the amenities in one of the parks we had under contract a couple years ago. So, the more amenities you have, the more money you're going to make, the more things there are to do at your campsite, and that keeps people on your property spending money, which is really, really, really pretty cool. So, you can see, if you got a little beach, people, if you have water, a little lake or a pond or something, having a water park obstacle course, that you can rent is really cool. Not only do we rent them to our campers, but we would rent them to the community, if they wanted to come to the park and come to our water park. These are the water park obstacle courses are really fun. They're both for kids and adults. They can cost anywhere from $5,000 to $50,000. They're inflatable. Okay, so they're all inflatable, and you just put them out in the water, and people pay by the hour or by the day or however you want to set it up. All kinds of different kinds of boat rentals that I just mentioned. There it is, paddle boats. That's pedal boats. That's what that was. So, we have a little pond where we can fish. We actually have a catch and release contest with our campers in the summer. We stock it with some little fish, and it's so much fun. The adults and the kids just really enjoy it. What's interesting, like when you have, like over here, you'll see themed activities in the park and different things that you do. Like we had over the 4th of July, we had a 4th of July parade, and we had our golf carts and other campers that have golf carts or bicycles. We had a parade, which was really cool. People like that. Or sometimes you'll have a band come in and play, and you'll every weekend we have activities set up, and a lot of campers will come and visit you um, because of the activity. They'll look on your website and your reservation site and they'll see whatever it is that they really enjoy doing, and then they'll plan their trip around that activity that you're going to be doing that weekend. So, and you can charge some of these things that you actually charge for the activities for whatever it is you're going to do. And there is no limit to the amount of things that you can do at a campground. So, um, anyway, there's a lot of different things here that you can have. The most important are going to be playground for the kids, certainly a swimming pool. Those are huge, um, and those are kind of really fundamental. But there's all kinds of other things. Now, this is just one campground, and this is what they were offering to their campers. And this is a pretty big park, by the way. So there's a lot of different things. Now, here are the obstacle course I was just sharing with you. This is a big one. This would be, in the $40,000 range, something like this. Excuse me. But they're pretty easy to set up, and you just set them up, and the campers will come. People love these activities. Here's some others, and I call this opportunities because, any of these things that you can do or buy, particularly, I really like water. I like a lake or a pond, because, you can see the kids like it, the adults are enjoying themselves, and it's just such nice. People just enjoy being out, kayaking, pedal boating, or whatever. So again, this is a fun business. It's a very fun business. And there's a lot of money to be had and a lot of cash flow, provided you buy it, at the right price, like, just like anything else, nothing new there. So this is our park that we purchased 2 years ago called Country Acres, located outside of Akron, Ohio. And you can see we have over 200 rental sites. Um, to keep this in the perspective, guys, we have over 200 sites. Now, if you bought a 200 unit apartment at $100,000 a piece, that would be a $20 million purchase. And somebody would have to come up with $200,000 just to bind the contract and that is going to go hard in 30 days for $20 million. Well, we bought this park at a 10 cap for $4 million. $4 million. So the pricing and the cost with the returns are significant. So at $4 million, that means we only needed $40,000 to bind the contract. We needed less money from our investors. And so the deals right now are very profitable compared to other property types and asset classes. Here's some more photos of our park. This is the pond that we have here. We do have a swimming pool. Here's one of the campers. They built their own, not, oh my goodness, their own, what am I looking for? Porch, if you will. Now, we do have rules and regulations that they sign on what they can build in front of their camper or not build, and then what their responsibilities are if they decide they're no longer going to camp here and they have to take all this down. But this is one of our long-term campers here, which is, they've been there for a long time. You can see how fancy it is. Here's some more pictures of the same park. There's our jumping pillow. The kids love the jumping pillows. And then we have a regular pool. And then we have a pool here for the handicap. This is one of those special devices that will allow somebody in a wheelchair to sit in there and then they get lowered into the water, which is really nice. Okay, these are our cabins. I think we have five of these. And so I'd like to have a couple more. They stay rented almost all of the time. All right, so this is Country Acres. Now here's an example. This is my software that we underwrite all of our deals with and different deals called Commercial Underwriter. And this was the final underwriting for this RV park. And you can see the returns over here. The cash on cash was 16.6 annualized, and the overall returns is 33.6. And there's no way you can find these numbers in today's market. If you're trying to buy an apartment, which is being sold on a pro forma. So I kind of got discouraged, to be quite frank. And when this opportunity came up to make real money in a different property type, I got really interested. So there was our purchase price, 4.150. That's what it was. Okay. And so, some of these deals, even if you don't get, trying to get to the Holy Trinity at 12%, at a 10 cap, should be really easy to do. The only place that I would share with you that's tough is when you're trying to deal with one of the big uh, real estate brokerage firms, like the big companies like Cushman and Marcus Millichap and CBRE, et cetera. Those brokers in those big companies are trained, and they're trained to go in, push the prices up. They're trained on how to work with the seller to get them to get their listings. And so some of those cap rates and the way that some of those properties are being sold, it's not going to have quite the same returns. It's going to be less. So, but if you're dealing with a real estate broker that likes to work directly with the mom and pops and understands the business, like we have someone like that, and you'll meet that person during the RV park mentoring, and where you can start getting listings on some of these deals. That's an introduction, and that's my relationship that I have where I can help you buy RV resort parks. Okay, so back to some of the financial benefits is like I said, there's many, many ways to increase your income. There's higher than average returns. The demand is high. And your income can be increased daily, weekly, or monthly. In an apartment, you have a 12-month contract. You can't do anything for 12 months. Campgrounds have been known to be recession proof. This was true during the real estate crisis in 2008, 2009, and also during COVID. These parks actually grew. And so, as I mentioned when we first got started, the outlook for RV parks and the interest is also growing. I always say that the outcome is the income, and that's what we do. We follow the cash. This is a park in Western Pennsylvania near where my wife and I had our own property. And the three brothers that own this, actually were really good friends with my wife's cousins. And so when we went to the park, we really had a really nice meeting. Now, there's a lake here that's owned by the state called Moraine State Park. And where this is located, the campers could just walk down this little road, and there was horseback riding. There was some canoes and kayaks here that you could rent from the campground. And then the campground took care of this little corner for the state. And therefore, the state, because it was so far away from everything else, this little corner, this is a huge lake, by the way. Um, the state allowed them to use this for free as long as they kept it clean and maintained it, which is what the owners did. But we ended up getting into a situation here. We had this park under contract. I love the park. You can see from the aerial view, it's just beautiful. Lots of woods and trees and lots of space. But the sellers that we found in our due diligence several years ago buried some oil and gas tanks underground. And when we did our phase one, the first bank, when they found out, because they did when during the phase one, they said, well, we're just not going to finance that. So now I was in a pickle. I'm in a contract. The clock is ticking, and now I needed to find another lender. So I found another lender. He went to the property. He told the sellers, say, look, in order for me, I can finance this property for Bob. That's not a problem, but you're going to have to do a phase two. So, in any time, if they suspect during the phase one that there could be a potential problem underground with an oil or gas tank, then it has to be investigated. And now, a phase one is typically about $1,500 to $2,500 for a phase one. The lender typically orders it. They send their environmental person out and they do this really quick report. And so when they found out historically that they used to have these gas tanks, then they were required to do a phase two. And if they were going to sell the property in a phase two, what they do is that they'll go right down under the ground here and find the barrels or whatsoever under the ground because they need to know if those barrels over the years rusted out and if there was anything in those tanks that would cause any kind of soil or water contamination. And then, if so, then you have to go to a phase three. Now, this phase two was $20,000 and the seller wanted me to pay for it. And I said, or asked me if I would. And I said, no, I said, this is your property. And, you guys, if there's barrels in there, you guys would have put it in there and this is your problem. I'll buy the property, but you have to do the phase two. And when you get into that situation, the sellers have to make a really big decision because if the state finds any kind of potential contamination where these barrels rusted or may have leaked into the soil or the water system, then they go to phase three. And a phase three can cost you anywhere from $250,000 to $50 million. depend on the extent of what they find. So it's a very serious, very expensive thing to do. And so we ended up getting our money back on this deal. So anyway, that's a little bit of an overview on the different types of campgrounds and information. I hope that was helpful for you. Okay, kind of get you started there. So let me pull up my next document here just real quick. I just want to, share a few things with you, things that I found and did when I looked at, because I was pretty much in the office buildings and apartments, which is how I got started in apartments years ago. So some of the differences right here between an apartment and an RV park, property taxes are higher in an apartment. They're much cheaper in RV parks. Um, the insurance is much higher in apartments because you have people that are living in your apartment 24 hours a day and they're cooking and they're using water all the time and water heaters and there's a lot that goes on and there's a lot of liability in an apartment where if you're out on a campground and you have a tent or you're staying in your own RV, there are no buildings there. Insurance is a lot less because you don't have all the buildings that you have also in apartments. Um, capital reserves in apartments, they're required. Fannie, Freddie, who are the big apartment lenders, always have capital reserves, but it's not required in an RV park. Delinquencies, apartments can have the national average is 2% delinquencies, and sometimes they can be high and there's non-payment. But in campgrounds, it's almost non-existent because everybody pays up front before they even get the camp. And so it's a lot easier to do business there. Apartments have a limited stream of income. You're really not going to make any money on your laundry. I analyzed that one time. It's an amenity and a convenience if you own an apartment. But this is all really small, very small income, where in an RV park, there's tons of ways to make much higher and many income streams that you can create lots of cash flow, lots of NOI, and build tons of value. The other thing that's kind of cool too is the eviction process. In apartments, you have to go to court a lot of times, and RV parks there are no evictions. There's no need to go to court. You can ask anybody to leave at any time. There's no tenancy. They don't live there, and that's the difference. You have tenancy in an apartment, but you don't have tenancy in an RV park. Payment styles, tenants in an apartment pay monthly, and customers in RV parks are fully prepaid before they even come into the park. They don't even get in until they're fully paid. So, looking at a delinquency report or detail, it's non-existent in RV parks. Future development, well, there's a lot of high costs for construction. I talked about this at the Learning Lab on Tuesday. That's one of the reasons the apartment business, the market is going to get a little bit better because a lot of the apartments that were built and started back about 4 years ago or so that are now coming out into the market, that inventory is getting absorbed, but there's not a lot of new building going on because of the high cost of construction. Campgrounds, it's a lot cheaper, and you can add multiple sites for a lot less money. Like how much is a cabin? And what is there to put concrete down and build and bring electricity for another RV site? So development cost, if you're going to do and expand, is really inexpensive. Liabilities, geez, an apartment, the liabilities are huge. Okay, not so much in RV parks. And then the last thing, as I mentioned earlier, RV parks are basically recession proof. Now, in the last national economic event, if you will, during COVID, we got money from the government just so we can make our payroll. But what was happening in the RV parks, because people didn't want to be in their house and their homes during COVID, they all went camping because it was a way to get out. It was outdoors and it was cheap. And that's what people really like about RV parks. And there's some real differences here, as you can see, which is between apartments and what I've been doing versus what's really going on here in the market. Okay. Now, last thing I'll do is let me show you a couple of deals, some underwriting here. Let me go into, just bear with me, I'll share my screen. Let me just, I'll pull one up for you. Oop. Okay, I'm sorry, just taking me a second. I had it up and I think I got thrown off the internet. Okay, one more time. And I'll show you my screen. Just a second, guys. Oh, I know why. All right. Okay, here we go. It was in another place. All right, let me just show you my screen. Pull this up. Okay, so here, I'm back. This is the park that we bought. A lot of times, one of the other interesting thing about RV parks, the sellers, most of these sellers have owned their parks for 20 years or more. And they're just tired, they're just burnt out. Like anything else, over time, it can get old. And they just got tired of operating. And a lot of sellers that have owned it, if you own a piece of property for 20, 30 years or more, your tax basis or your basis is going to be really low because years ago you paid just a fraction of what it's worth today. And so a lot of sellers have huge tax consequences when they go to sell their properties. So a lot of them love to do seller financing. And so that's a really good way to get into these deals. Now, the financing on this deal was seller financing. And that's a whole different story. And that's some things I need to talk to you about and train you about and position you on how you want to do this because we had a great deal of difficulty after we came to a decision and an agreement. The seller decided that they weren't going to fulfill the agreement that we put together in writing. So I'll have to share with you how to get that and what to do in order to get through that. But anyway, this was the seller got, a bunch of money. I think they got 1 million in this deal. They got 1.5 million or so. And, we still owe them 2.6 million. So they've been making about 15,000 a month cash flow for the last 2 years because it's a 2-year IO. And and then they avoided paying huge taxes on the difference and they deferred it and they're making even more money. They're making another probably what 14,000 times 24, whatever that is. That's what they've made so far. So if I 14 times 24 months, yeah, there you go, 336,000 on top of the 4.1 million we paid them. That's a pretty good deal, isn't it? So a lot of sellers in these RV parks, because of the tax purposes, and also, when they operated this, they loved the money. Now they still get to make money for another 2, 3 years, or, this particular case, we have a 5-year a loan with them. And so, but after 2 years, we can sell it or refinance it according to the agreement that we eventually got to on this deal. But, the returns are really good because we have so many different ways we can make money. And the cool thing, like in commercial underwriter, we can just, we just put in how much we're going to increase the rents, over how many of the sites we're going to do it, and then what we're going to do with the other sites. And it's just you can see it just runs itself out. It's so very much profitable and easy. So anyway, that's one of the reasons why, the biggest reasons why for me today, I like these RV parks. But like I said, not to be a broken record, the opportunity is starting to close. So the sooner you can get in and start underwriting these, the better off you're going to be. I have some things in my software specifically for RV parks. I'm getting ready to do another upgrade for commercial underwriter for RV parks. I'm laying out the some things I'd like to do just for RV parks that I'll have incorporated into the existing software. But I think it's a really good opportunity for those of you that are sick and tired of not finding an apartment deal and not being able to do the deal or make any money. This opportunity for this type of product is here today. In terms of how you value it, it's very much like an apartment or a mobile home park or student housing because it's unit based. As you know, or you might want to know that commercial real estate is valued and underwritten either on a dollar per square foot or on a unit base. Apartments are unit based, storage units. RV parks and mobile home parks are the site, and they're all underwritten. So if you know how to underwrite apartments, this is going to be a nice transition for you if you have an interest in doing this, because RV parks are unit-based underwriting. So it's just a matter, the differences are, instead of just having your rent from the site, you have tons of other income. You have other income from your store, where you're selling merchandise and, like coffee mugs and t-shirts and sweatshirts, and you're selling firewood and all kinds of things. And then you're going to have a snack bar or a restaurant where you're going to sell ice cream and popcorn, hot dogs, nachos, and things of that nature. And you're going to make a whole bunch of money on food. So then in addition to that, you're going to make money through your rentals, your golf cart rentals. Our golf carts stay rented all day long, all the time. I bought 5 of them. They were all 4-seaters. You want to get the 4-seaters, not the ones that are 2-seaters that you put golf clubs in the back. You want to have the bench seat in the front and a bench seat in the back. People love those. I bought 5. It cost me $55,000 or a little over 10,000 a piece. And once we brought them in, we already had golf carts, but we knew as a value play with not a lot of risk, whatever's working at the park is what we like to build upon, because I don't take unnecessary financial risk. And so we bought 5 more golf carts, and they just stayed rented all the time, all summer long. And matter of fact, we even increased our price because they were just in such high demand. People wanted to use them. So when you're renting kayaks and paddle boats or bicycles or whatever it is, now I stay away from e-bikes. Just a word of caution, because sometimes, unless can dial the motor back, it's called the governor, you can adjust it so it doesn't go very fast. You get these kids on the bikes, and sometimes they go too quick, or you might find them without a helmet. They can hit a car, or I just find that the e-bikes have a lot more liability with them and concern, especially when you have younger people, under 18 riding them. So I just don't do e-bikes on my property for that reason. So, but I'll do just about everything else. But e-bikes have been problematic in the past, when I've talked to other owners, and so I've just kind of stayed away from them for now. But again, that's just me. So anyway, I hope this has been helpful. If you're interested in learning more about RV Resort Park, I am doing a coaching and a uh, mentoring session coming up in about 2 weeks. This is not a class. This is about doing business, doing the deal. And we start off learning about the parks, Then we take a deep dive into all the aspects of operating a park. We do very deep dive into the underwriting, to the revenue, the expenses, the financing, and then I start bringing on my personal contacts so that you can meet them and get their cell numbers. This would include our my attorney. Now we did have to modify the PSA because this is not like operating an apartment. And some of the things that we learned earlier on where we got burned and lost a bunch of money is that we were approaching this as apartments because that's all that we knew. We didn't understand the RV business, but I have my bank, my guy from the SBA, the Small Business Administration, as well as the conventional bank. I bring my real estate broker. My real estate broker right now has over 130 listings. Okay. And a lot of these are 10 caps and they're all over the country. He's been around for 52 years in the RV business. He knows everybody. You will get to talk to him and meet him. I also have our reservation company that we use, the National Sales Manager from CampSpot, because it's your reservation system that's going to be out on the internet, that's going to drive your business. So, anyway, I have a whole host of people, including property management company that you'll get introduced to. So then after we get into that point, then we're going to break off individually. And then that's when you start underwriting your own deals and we start working together towards getting you a deal, which, that's the whole idea, taking you all the way through the LOI. And depending upon your time, your interest level, if your willingness to take action, I can take you all the way to the sales agreement, all the way to there to get you to help you get this deal. So that's what I'm doing. It's a basically a 3 month program, 2.5 to 3 months. It just depends on how many times we can meet during the week, and it's usually a fairly small group. And so, if you're interested in not just learning the business, but doing the business, then please reach out. Now, Suze is going to send you an email that has some of the information on it. And so, if you'd like to sign up, I do have an early bird special going on if you'd like to take advantage of it. So I hope this will, oh, by the way, the price for what I'm doing is $7,000. It's 69.95, but the early bird special is 49.95. And it's just not the 2.5, 3 months. Um, After we finish all of that, I'm still working with the individuals as they go at their own pace to try to get their own deal. Now, I can't do everybody's deal. I can't sponsor everybody's deal, but I can certainly help everybody get their deal done with even within my own circle of contacts and sponsors, investors with money. I can help you with all of it. I just can't do every single person and every deal. That's not practical. So it's up. My goal is to help you to build your business, not my business. My business is I'm already done. So this is probably going to be right now in my mind, my last year. And so I want to help as many people as I can. And then I'll see where I'm going to go from there. But Suze can pass the information. And if you like that, then hopefully I'll see you in a couple weeks. So I hope this was beneficial. If you have any questions or Suze, let me know.
Yes. Well, thank you so much, Bob. But I just wanted to make that um comment, like Bob says, you're buying a business, but it's a very profitable business. If you are not ready for that, this may not be for you, and I'm sure it's not for everybody. But you have to look at the other side as well. Um, I mean, what Bob is presenting you right here, that is a business. We just got ourselves into it, and that was because of Bob. A year ago, my partner and I, Eve, she's right here in here in the meeting. So we went to a meeting that Bob was having a workshop. Then it was a workshop. It wasn't a mentorship. So we got so much out of that one workshop. Imagine what you can get out of that mentorship, having Bob helping you. And like he said, he didn't sponsor our deal because it wasn't going to work for him. But it was doable. We were able to do it on our own. And but we did get some guidance from him though. But what he will bring you, the value, all those people, he will definitely bring you the business by introducing you to those people. And that is like really when you're doing a business, what really the hard work is finding the people to work with. And he's bringing you that. Imagine you got the lawyer, you got the lenders, you have the person who had the deal, and which I can speak into because when Bob came with that person, we reach to that person right away. But then again, you need to be hungry, okay? And you have to believe that you can make that work because if me and Eve can make it work, you guys can make it work as well. So yes, we went ahead and Eve called the broker, and we were able to find a deal, and we worked at that deal. Yes, there's a lot of ups and downs in anything you're doing in life, but however, it took us a while to close, but I think it has something to do with the bank we were using. We didn't use Hayes Bank, Hayes lenders. We use other lenders, and we learned not to do that again. However, I'm telling you guys, this is something you guys get in that business, and I know you guys spend so much money in other things. That's a business that's gonna work. That's a business that can get you into the game. And if you want 2026 to be a successful year, you don't want to be on the sideline, I would urge you guys to go for this one if it's something you're interested into. But as Bob said, I will send you guys the email if you guys interested. And we really happy for having Bob here. And we really thank you guys for coming. As you know, we meet here every week. Next week, we're going to have another speaker. And as we meet every week, we're going to be here. But to everyone, again, Happy New Year. And it was such a wonderful, I thought since we just closed on our deal, and I thought it was a good to have Bob come in here and open the session for this year and introduce you guys to this. And either way, and if you guys don't feel like doing it as a business, you can just be an LP, an investor. At least you can watch what's going on and still making money as well. But you guys need to start getting yourself into this asset class because this asset class is now is the place to go. Now is the way to go. Well, Bob, I don't know if you have anything final you want to say. We really thank you. As I told you, I was excited to have you here. Thank you so much for
Yeah.
coming
Well,
this
thank you for the
afternoon.
invitation. It's good to see everybody and some familiar faces. I see Eve.
Thank
Hi,
you.
Eve and Bob.
Hi. Yep. We're
And
on our way to the RV park now.
awesome.
We're driving there right now.
Yeah. Yeah. Well, I would go to mine, but it's only like about 8 degrees and tons of snow on the ground. So I'm going to stay in Orlando in my golf shirt and my golf shorts, where
Yeah.
it's 72 degrees outside and
Right, yeah.
sunny.
Yeah.
Anyway, thank you, Suze, for having me and Eve as your guest. I've enjoyed it. And again, if anybody is serious about doing this business today, now, I do this myself. It's me live, there's no recordings. It's working directly with me in every single session through the entire process. So, that being said, I hope everybody has a nice weekend, what's left of it. And good luck with your transition, Eve and Seuss, with your deal.
Thank you.
Thank you
Okay,
so much.
guys.
Yes.
Thanks
Thanks.
again. Have a good weekend.
Thank
Thank you,
you,
All
Seuss.
Bob.
right.
Thank you, and
Thank
Eve.
you, Bob.
Nice
You have a good weekend.
weekend.
You're
Thanks,
welcome.
Suze. Eve,
Hi.
Nice weekend, Bob. Wilson from
have a
Nigeria.
great
Metro
weekend.
Bob. Vain Colombo. Hello,
All
Bob. Are
right.
you hearing me? I said I met Bob once with Bianca Rambo. So this is second time for me to meet him.
Oh, okay. Yes. Okay. Good. Good. We couldn't hear you well. Yes. All right then. Well, thank you everyone, and we'll get to see you next week. And Happy New Year again. Bye. Have a good week.
Thank you, Suze. You too.